Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at Afterpay and its push to become more like a bank. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering all of your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now the war between the big four banks and the buy now pay later space has heated up last week as Afterpay released its new money app, which is targeting Gen Z and millennials, and it's another step forward in Afterpay becoming more like a bank. Now, as I've stated in previous reports, the big four banks are really good at sitting back and watching others take the risk to develop a market before entering, and this is very much what they've done in the buy now, pay later space. Now, 2 weeks ago, Westpac joined CBA in offering a zero interest credit card aimed squarely at the same marketplace as Afterpay. Now, given this, I suspect it won't be too long before ANZ and NAB actually join the party. The big point of difference between the banks and those in the buy now pay later space is in the area of lending, and I believe the banks have a distinct advantage here. It's one thing to provide a service where individuals can buy an item and pay for it over a month, but Gen Z and millennials also need to be able to borrow for housing and other loans. Another advantage the banks have is that they are already regulated and well-established compliance systems. However, until recently, compliance and regulation has not been a concern in the buy now pay later space. But ASIC has made it clear that they are looking at regulating this market, which is likely to add red tape for the buy now pay later organisations, resulting in reduced profit margins. That said, the banks can be old, stale and slow to move, as they are really big elephants with old systems, while the buy now pay later space is the new frontier. So the next few years will be interesting to watch as they release new products in an attempt to gain more market share. Now the obvious winner in all of this will be the consumer, as more competition means lower prices, better services and better products. Right now, whilst some of the stock prices of the buy now pay later providers are not doing very well, I'd still watch this space, given that in 2022 it is likely we'll see some nice movements, especially with the larger providers. While I commend Afterpay for releasing this new product, now's not the time to enter into this stock. Now it's time we get into the market, and as normal, we're going to start with what were the best and worst performing sectors last week. Well, the best performing sectors included materials, and that was up 4.71%, followed by industrials, and that was down 0.12%, and financials, that was down 0.56%. The worst performing sectors included healthcare, down 3.43%, followed by information technology, down 1.79%, and then consumer discretionary, and that was down 1.22%. The best performers in the S&P ASX Top 100 stocks include Evolution Mining, that was up 12.63%, and that was followed by Northern Star Resources, that was up 10.52%, and Fortescue Metals, that was up 10.37%. The worst performing stocks, that included Xero, and that was down 7.9%, followed by Ramsay Healthcare, down 6.7%, and Cochlear, that was down 6.59%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, what an interesting week we had again last week on our market. I mean, we were thinking, well, this time last week, we were thinking that the market could rise up through all of last week and possibly even sort of give a nudge to that all-time high, given how strong the prior week was. But last week, what we saw was our market trade down for the first 4 days of the week, Monday, Tuesday, Wednesday, Thursday, and fell right down. I was nearly down about 1.5% by sometime late on Thursday, mid-Thursday, and then late on Thursday. It did start to come back, and Friday also went up. So we're still seeing that indecision in our market where sometimes it wants to go down, but it's not really wanting to push higher. We're not getting the bulls with much conviction. If the bulls were coming in with more conviction, then we'd start seeing a lot more direction. But let's go and have a look at the charts just to really have a good look at what is actually happening and what might happen in the coming months. So as normal on the screen, the left-hand side of the screen is a monthly chart, and on the right-hand side is the weekly chart. I'm just going to go to the monthly chart for a bit of a look here, and you can see how it's sort of folding off from its range or its momentum that it was doing right through to that all-time high in August. And we've had the last 3 months where the market really hasn't gone anywhere. We're still below our August highs, but we can see the close there in September at 7629. And if I use my little tool here, you can see between there and there, we're only at 1.78% in quite a number of weeks. So it's not really moving very much. Obviously, this part here on November, we're looking quite strong. We opened at 7639, and currently it's closing at 7765. So it's reasonable because it opened on, it's closing right near its high at the moment. So I'd love to see this month continue to move on and break through that high there of 7902. But I'm not super confident at the moment. As I said, we do need to see more participation of the bulls, and this is suggesting at the moment the market is just waiting for something to really sort of tip it over the edge, if that makes sense, to go, yep, now the market, everything's fine, we're going to be moving forward. And I'm not sure what's holding it back at this point in time. It could be rising inflation, it could be other different factors around the market. Obviously, in Australia, we're still not fully out of lockdowns, etc. I mean, Queensland is still locking people out. We're still not over the COVID crisis, and I think we're sitting on a wait and see here at the moment. But let's go and have a look at the weekly chart and see what's going on in the weekly chart. Now you can see here there's grey trend line up through here, and you can see it's really tipped over this whole market right through here, and it really hasn't risen so much over the last sort of 12 months. If we go right back here to start of January, we're not really haven't sort of moved too much. It's 12 or 13%, which is not too bad for our market. It's generally sort of about average, but since, as I said, since that August high, it's really sort of done nothing. And if we can even go right back into sort of June, early June, you can see how we really haven't travelled too much there. And we're getting a lot of resistance up around that sort of level there. And that's really where it's sitting at the moment, that 7742. Now, looking, if I blow that up, and you can see here we've had the big low down there in October, which I thought the next week we'd still continue to go down to sort of make that fall down through here between 8 and 12%, which I was talking about. But as I said, we didn't make it. We made it about 6%. So we've had 1, 2, 3, 4, 5 weeks up to that high of the week ago. That was 7797.8 points. Last week, as I said, because of that really strong bar, I thought we would go nicely up here and really give this sort of previous all-time high there at 7920 a nudge, but it didn't. Last week's bar had a high of 7797.4, and this was 7797.8, so it didn't go higher than the preceding bar. But the interesting thing is it really came back on Friday, and I'll show that on the daily chart. Now, you can see Monday closed lower, Tuesday closed lower, Wednesday closed lower, Thursday closed lower, and Thursday we were down over 1% before it came back late in the day to close up higher, and then Friday really did take off to get to that high there of 7787, but came back later in the day just to drop a little bit. So it'd be really interesting to see what happens Monday or today, Monday, Tuesday, see what's going on. If we start seeing a bar that's closing or trading below that close there, we may see that get broken, that low of last week at 7647.5 points get broken. If that does, then we might see that low there at 76.34 get broken. So that's not really telling you too much about where the direction is. Now, normally the market will have roughly 5 weeks up and a couple of weeks down if it's bullish, anywhere between 3, 4 and 5 weeks up. More like 4, 5, 6 weeks up if it's more bullish, more like 2 or 3 weeks if it's bearish. Now you can see 1, 2, 3, 4, 5 up through here. Through here you can see we can go back and we can go 1, 2, 3, 4, and then a sideways movement through here. We've got 1, 2, 3, 4, 5, 6, and a bit of a sideways movement. If we keep going back, you can see 1, 2, 3, 4, 5, 6, and a sideways movement. Here's 1, 2, 3, 4, 5, and a down move. So you can see it's not uncommon. 1, 2, 3, 4, 5, sideways is movement. So is that exactly what's happened? How long is this sideways movement going to last? Is it going to be a couple of weeks? Is it going to be a little bit longer than that? Is the market going to turn over? So the scenarios right now, and I want to give you both sides, and I always want to give both sides so you can be logical and understand and have rules around it, because it doesn't matter which direction the market goes. And I know this probably annoys some people. They say, just tell us, is it going up or down, Dale, so I can make a decision. Well, I can't control the market and neither can you. So I need to be prepared for both scenarios all the time. Always need to be prepared for both up and down scenarios and have rules around what you're going to do. So the market's moved up. So it could just do this and then move up and then break through that previous all-time high. We could see the market move up from here, from this week, and break through that high and just go straight up through that all-time high. But that, I don't really prefer that one, simply because the more it goes up through here, the bigger the fall is going to come down on that other side. If we do have that easing off for 1 or 2 weeks, like I'm showing here, then the move is more sustainable right through to February, roughly. And we should see that. The other scenario is, or the more negative scenario is, that the market does this and we go down and we eventually get down to that 8 to 12% that I was talking about from sort of mid this year, from about August there. So 8% takes us around to around about that 7,200, and 12% takes us around to that, where is it? There we go, 6,900 odd points. So it's possible. If that does happen, then we'll see December and January probably down. It'll probably be more of a sustained move, probably over a period of 4 to 8 weeks going down, probably. But it's, the way the market is, it's surprising us constantly over the last couple of years. So it wouldn't also surprise me if it just went down quite quickly and then bounced back from there. But as I said, that's the worst case scenario. So you need, as a trader or an investor, you do need to be prepared in case the market does what you do not think it's going to do. And that's the really important thing. A lot of people will look at they'll look at reports, they'll go onto websites, look at YouTube videos like this one, and they'll go, oh, this person said this is going to happen. And then when it doesn't happen, the opposite happens, they blame the person that's putting out the report. And it's not necessarily, that's not the case. They're giving you their best guess at the time based on the information they have that day. So what I've just said is my best guess based on what I've seen on that chart today. That's really what I'm talking about here. Today, as the market opens, because this is before 10 o'clock, the market hasn't opened on Monday yet, something might happen on the market, announcements. So volatility can't be predicted, and I know people say, why not? Well, because we don't know what's going to happen. The government could come out with an announcement. We could see stocks, big stocks, do some sort of announcements or reports. We could see a natural disaster happen, like we've seen, tsunamis and all sorts of things. There's all sorts of things that will affect the market that we have no control over. Zero control over. All I can control as an investor or a trader is when I get in and when I get out. That's it. There's two things that I control. While my money's on the market controls the money, and the market is then dictating whether it's going up or down, whether that's the stock or the total market. So that's what's happening. So I always need to have that scenario where, well, if it does go up, what's it likely to do? How is it likely to unfold? And this is where the GPS, so to speak, is how patterns on the market unfold. And a lot of people don't understand patterns on the marketplace. So the market runs in time, runs in price, and it runs in patterns. So time and price both make patterns. And it's about looking at those and go, what did it do in the past? Like that 5 weeks I was saying before, roughly 5 weeks up and 1 or 2 weeks down. Or as we've seen over the last 2 years, it's sort of gone sideways a bit, not much down too much. So but normal is it'll do 5 weeks up, 2 weeks down, 1 or 2 weeks down, sometimes 3 weeks down. In a more bearish market, it might be 1, 2, 3 weeks up and 4 or 5 weeks down. So we need to look at those patterns because they give us the roadmap as to what's likely to happen. Now, that's a shorter time frame that I've talked about there in terms of weeks, but we still get time frames and patterns in terms of months and decades and years and decades and centuries. We get these bigger patterns. Looking at that, and the bigger patterns dominate the smaller patterns, just like any bully in a playground, basically. The big patterns are what we need to understand. I'm just talking short term here. So what I'm saying here is right now, we're sort of on that, the seesaw is sitting there going, okay, we're going to go up, or we're going to continue to go up, or is it time for us to come down again? And you need to have rules around that. If the market does go up today and goes up this week and looks really bullish, what are you doing? Are you buying, you're staying, you're holding with your stocks, you're looking for other things? But if it goes down, what are you actually doing? And this is the question most people don't answer. And it's the biggest issue that I find with so many people that come to us to learn trading is before they come to us, they go, I know how to buy, but I just struggle with selling. I don't know how to sell in the right spots. People sell when stocks are rising on them and they lose profits that they could have otherwise captured really, really safely. But more often than not, they buy a stock too early and then they get caught in that falling knife scenario. So hopefully that's not you. But as I said, right now at the moment, if the market does go up today and into this week, then I'm pretty sure we'll probably go through that all-time high pretty soon, and we'll reach through that before Christmas. If it does go down this week, then it might only be 1 or 2 weeks down, but how deep that move is will tell us where the move is through to sort of February, March, and that's why I'm sitting back at the moment, just being a little bit more conservative in my theory about where the market is going to go. Now's the time to get into your questions for me today. The first question we have today is from Edited 3 months ago, which I'm not sure whether that's your name or what actually happened, or whether you just edited your name and that's what they put up. But I'd love to know what your name was. But anyway, last time I made a prediction, this is what they're saying, last time I made a prediction on the market last year, I was 100% wrong. I got out of good positions this time last year, like Galaxy, South 32, Afterpay at $22. I went into gold mining stocks, still holding a bag. If you can, Dale, give me hope on BGL, NST and ZipPay. Thanks. Look, you know, I don't necessarily call it wrong. You're making your best decision based on your level of knowledge at the time and the research that you had at the time. And this is the thing, is a lot of people think it's right or wrong to make a decision. That's sort of what I was getting at a few minutes ago, is always about probability. The market is not 100% and it never is 100%. So to me, it's never about a decision about, is this a right decision or a wrong decision? It's about what is the best decision I can make based on my level of knowledge and skill and the information I have at that particular time. So you obviously thought gold and those sorts of stocks were going to go up, and the stocks that you had were going to go down, and there's something made you or caused you to make that decision, whatever research is. All I say to you is you just need to have rules, because obviously you've held on to stocks over that period of time since last year that you probably shouldn't have held on to, and you can't cry over spilt milk. That was yesterday. So the stocks you got out of, you chose to do that. You can't. And that just tells me that if you blanketly got out of those stocks that you should have stayed in, then you probably didn't have rules around that as well. And this is what I was talking about. Most people don't have really good exit rules on stocks. Anybody can flip a coin and go yes or no whether I'm going to buy a stock, but very few people know how to sell stocks at the right time. But let's go and have a look at one of the stocks. I picked BGL for you, simply because we're going to look at NST later on for another question. So I've picked BGL for you. On the screen you can see BGL there. It's looking really nice. This stock is looking quite nice at the moment. Yeah, you know, you probably bought it a bit too early, because you can see, if 12 months ago, if we're looking at where's November, October, there's November, you bought it just moving into that high. It'd been moving up for quite some month, and even here you got 1, 2, 3, 4, 5 months through here, making a big high. And yeah, you're probably losing money at this point in time, but it is looking really, really good. And you can see here, it's if I look at this, and you see me do this so often, it's just roughly come back to its momentum. And as I say, when stocks really start to take off, get out of there, when they take off, they do move across way away from their momentum, but then they'll come back. And it's like, I don't know whether you've ever had, you know, when you're younger, and I'm not sure how old you are from that point of view, but you may have seen these toys are like a table tennis bat with a piece of rubber and a little ball on it, and kids are just bang, 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 and the ball goes up and back all the time. That's sort of what happens with stocks, is think of the bat as being intrinsic value of a stock, and the ball goes far above it. But you can do the other way. You can tip the bat upside down and bang the ball downwards or upwards. So that's sort of what happens with the markets. If that's the intrinsic value of a stock, the ball goes up and down below it and up and down below it. That's what happens with the market. So stocks get overvalued and go above its normal momentum, but then they get undervalued and then they go overvalued again. That's exactly how the market works, and that's all this stock has done. It got overvalued, it got overheated for a while, come right back. So you bought too early. Right now I do like that stock. But let's go and have a look at the weekly chart, just so I can talk to you a bit about that. And you can see here last week, and I'm not sure when you put that email in or put that comment into the section, but you can see here last week, there's big strong move all last week, Monday, Tuesday, Wednesday, Thursday, Friday. You can see through here, Friday it opened up, pushed up, came back and closed lower, but 1, 2, 3, 4, 5. I wouldn't be surprised if I see 1 or 2 down days on this stock this week, but I'd really like to see it hold sort of above that 93 cents, above that peak there, that 93 cent peak. If it just comes down 1 or 2 days, And then turns, I think this is pretty good. I don't think you've got too much to worry about this. But that said, again, it's always about having rules around when you exit and where you exit. So when you enter and where you exit. So you need to have rules around that. And I think that's really where your issue was. It's really about having a process issue. And a lot of people say to me, it's about tidying up, the buy or the sell. Well, it is partly about that, but then it's a strategy. And to me, you've got to go back and look at why you sold at the time and have a really good look at that 12 months ago. Why did you sell those stocks 12 months ago? What was going on? What kind of plan did you have? What rules did you have around that? What research did you look at to make that decision? And can you tighten that up? Can you find holes in it where you made an error in judgment in all of that? And then why did you buy the stocks that you did? And then why have you continued to hold them there? And by going and look at the process, then we can tighten everything up. And often when I'm teaching traders and investors, I've got to untrain some of their thinking, because some of the thinking is just not correct. It's, they've listened to let's say the big end of town of how they do certain things. And us as individuals, we can do a hell of a lot of stuff that the big end of town don't do or can't do, simply because they're just too big. We're quite nimble. So it's about tidying up your strategy and process first, and then looking at where to buy and where to sell, the entry and exit points. Hopefully that makes sense, because if you don't have it's like if you're building a house. When you have a house, the first thing you do is do the plans. So you have all the engineering drawings and all the other drawings that you have for the house, so that you know that you build a proper house. And what I find is the majority of people in the marketplace don't have any plans. When I get a room full of traders, I ask them, I said, who's got a trading plan? And I can guarantee every time I've done that in the last 25 odd years, I think it's about 80 to 90% put their hand up and say they don't have one. And I say, who has used trading plans in the past? And you get more people putting their hand up. And I say, were you more profitable when you use your trading plan? And they keep their hand up. And then I ask them, do you stick to your trading plan? And they put their hand down. So it's interesting how traders agree the trading plans work and they're more profitable when they do use the trading plans, but so many of them don't use them because it's the whole effect called the Dunning-Kruger effect. They think they're better than what they are. And this happens to a lot of new people, and one day I'll explain it a lot more to you, but I find a lot of people have overconfidence in what they know and what they can do, if that makes sense. You're better off being humble about the market, but keep it up, keep working on it and keep looking at it. But as I said, go back and look at what you're doing. But thank you for asking the question. Now we'll move on to the next question. This one is from Decibel825. Just because ASIC declares they now regulate crypto does not mean anything. Those scammers create crypto scams like Ethereum or XRP will still make money off naive Australian investors who think ASIC declaration means something. I 100% disagree with you. The ASIC declaration does mean something, because we can't stop scammers. It's just not going to happen. And so it would be delusional to think people will stop doing that. Scammers have been around since Adam was a boy, if it makes sense to you. And ASIC coming out and saying we're going to start regulating the market is a really, really positive sign. And we need to do that because, again, we need to give people a chance of being in a fair and reasonable marketplace. So it is a really big sign. It's also a big sign that Commonwealth Bank has got in and allowed to trade cryptocurrencies. People get caught in scams all of the time because they don't listen to ASIC and they don't look at the research. They work on FOMO and they guess a lot and they believe a lot of what they see on the web. I don't know how many times somebody's, not a student of ours, but how many times somebody's had me on the phone or they sent an email and saying, oh, I'm doing something with this company and they're guaranteeing me 25 or 30% per month on my money, and I've put $5,000 in with them 2 months ago. My account's up 200%, and I've just put more money into that, and I go, why have you done that? And they go, oh, because I'm getting this money. I said, is the money in your bank account or is it still with that company? And they go, it's still with the company. And then I go to the website and I look at the website for about 30 seconds and I go, nah, this is a scam. And they don't believe me that this is a scam simply because they don't want to believe it's a scam. And the website might look really, really nice, and it could have, Macquarie, Macquarie International Equities is the name on it, and playing on the name of a really trusted education or trusted institution or something that sounds nice. And they might have a really nice logo and they have nice pictures all over their website. But I can tell really quickly because there's real telltale signs, but I see so many people get stuck in this sort of stuff. And then when I tell these people, I think you're getting scammed, they don't believe me. I said, well, just try and get some money out and then let me know. And then a few weeks later when we chat again, they've really figured it out. They haven't been able to get their money out, and all the company's done is provided a fake environment telling them they're making money. That entices people to put more money in, like a Ponzi scheme. You're making money, you put more money in. Then you tell other people to put more money in, and then they put more money in, and it runs like that. They provide this fake environment that you think you're making money, but then when you try and get your money out, it doesn't happen. And I see this so often, regardless of whether it's crypto or stock market or FX or binary options or whatever it is. I see it so often because people tend to be greedy and they believe they can make all this big money quite easily and quickly without turning their brain on. You're never going to change that, mate. You're really not going to change that. ASIC needs to regulate crypto market to make it fair for the most people, because people are going to trade it. So they do need to get into it. So I'm sorry I disagree with you on that one. All right, moving on. If you are enjoying this video, then please give us a really big thumbs up. Now we have a question from Barry who says, "G'day Dale, I took a position in MNS at around 40 cents early August 2021. It went down and then recently up, and I'm green as they come, mate. Could you speak to this one and give me some insights? Regards, Baz." All right, Baz, I'll have a really good look at this one for you. So let's take a look at the screen. On the left is a monthly chart, on the week is a weekly chart, as we normally do. Really, I mean, it's looking pretty good at the moment. You went in at 40 cents, I think it was what you said there. So you are making money at this point in time, but it gets down to what I was saying before, is if you get into a stock, you need to understand when and how you're going to get out of it, because anybody can buy a stock going up. Right now you are making money on this stock, but not knowing when you're going to get out of it is to me, the real critical thing is you don't make money unless it goes into your bank account. And whilst the money's in a stock, you don't control it. As I was saying earlier, you only control when you get in and when you get out. The market is in control of your money. So if, let's say this week the thing falls through the floor and goes down to 30 cents, how are you going to get out and when you're going to get it, or how you know that's going to happen? You need to have plans around that. So this is not a stock that I would suggest you trade if you're asking me these questions. And it's not about being rude to you. It's just saying if you don't have the knowledge to get into it and get out of it, you shouldn't be trading a stock like this, because it is low liquid stock. But what is it doing right now? Look, it is going up. It's doing up really, really nicely. So was it a good entry point? Probably, but I think it's probably more guess from your part. But look at the whole history of this stock. It really is a sideways moving stock. It's very much a trading stock. It's not a buy and hold stock. Looking quite bullish this month at this point in time. Currently looking at the weekly chart, you can see these periods where it goes up and down. But if you look here, when it does go down, it goes from there to there. That's 34% pretty quickly. That it can actually go down, and that's not unusual. From this one here, look at the range of that one. That's 33% just for one bar. So it is quite a liquid type of stock. If we go down to the daily chart, you'll see through here. So at the moment, if it fails to break through that high of 75 cents this week, you may see it turn around. But right now, I just stick with it at this point in time and just draw a line in the sand of where I would get at, because you can see these big upwards moves don't really last too long. It's like 1, 2, 3, 4, 5 weeks. 1 week. 1, 2, 3, 4 weeks. 1, 2 weeks. 1, 3 weeks. 1, 2, 3, 4, 5, 6 weeks. So it don't last very long, and most of the time it spends going down. 1, 2, 3 weeks. Now let's go back to the current time frame on this one and have a bit of a look. 1, 2, 3, 4, 5 weeks. So that would I'm not telling you to get out. I'm not giving you any sort of advice on that one at the moment. All I'm saying is stay with it while it goes up. Exit when it goes down, Barry. And I really do think you need better rules around that. Right now you are making money, but I suspect it's a little bit more of good luck than good management. And again, that's not being rude to you. It's about understanding what you're doing, and that's why so many people get caught in stocks, and they get a stock like this, and next minute it falls down and it goes below their buy price, and then they stay with it for a period of time and it just goes sideways and they don't get anywhere. So just protect your money. Again, your choice, whether you hold, sell, whatever you do. I'm just saying at the moment, whilst it's going up, stay with it. If it starts to go down, then get out of it. Now we've got a question from Talia who says, "Hi Dale, thanks for your weekly reports. I'm looking at NST and RRL to purchase. as they fit within my criteria to buy. Just wondering your thoughts on these. So she's got a buy signal on these stocks. I'm going to have a look at NST, as I said earlier, because that was the other gentleman was asking about that one as well. So let's have a look at that. She said it's fitted the criteria to buy. Look at this beautiful looking sort of trending stock NST at this point in time. It does move beautifully. It has really come back more recently when we see there from there. So we've had a 53% move down on this stock. So that's not too bad actually, and we've had a nice strong move through here in October, and then November's been really, really strong. So I do like this stock at the moment. So I don't discount what you're actually saying on this stock. I do like it. I think this stock looks pretty good. I'd say there was a buy signal on it from there at this point. Look, I like it. I really do like it. I think you should stay with this stock while it's moving up and have some really good rules on it, because I think we may be seeing a nice little uptrend through here. I would expect it to break through that in the near-term future, $11.79. So I'd say to break that over the next few weeks and do very well. I think you picked a really good entry on this stock, and there's probably not much more I can say other than well done for picking that. Obviously, your criteria for picking that stock was right on the money. Now, if you do have any questions that you would like me to answer, then hit the subscribe button now. Also remember to publicly subscribe to the channel, as this is your best chance of us answering it. Then stick your question below in the comments section, and remember that here on this channel we do these Monday market reports each and every week. Also do our live stream on Tuesday nights at 7 to 8 p.m. So I look forward to seeing you tomorrow night. Remember, hit the subscribe button now, click the bell on the right of it so you know when we upload and we also go live. Also, big thumbs up if you've liked what we talked about today. Thank you very much for today. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.